Hi everyone. Thank you for joining this webinar on Unifying Finance and Risk. I'm Srini Raju, Solutions Architect at Oracle Financial Services Global Business Unit. Typically, unifying finance and risk transformation programs carry negative connotations. That these programs being expensive and taking significant amount of banks' resources. And more often, these programs taking a lot more time in delivering actual business value. Well, we at Oracle have helped a number of banks in this journey of unifying finance at risk, starting with data. Well, topic of the discussion today is a data-driven approach to unifying finance at risk. Now, what this means is it's clearly a no big bang approach to analytical transformation, meaning working with customers' priorities and enabling them quick wins. So let's get started. To set some context, let's look at some of the drivers for transformation. Now, I'm, I'm sure you recognize or you acknowledge a number of these drivers, now, especially when we talk to the finance organization in the journey of modernization. Their focus is largely to streamline the core. What this means is bank moving towards a more thin chart of accounts, enabling them with more control and also efficiency, meaning a much smoother and faster financial close. And also have a thick chart of account design for more detailed analytics or even strategic insights. When we look at some of the drivers around regulatory environment, what we've seen in the last few years is the regulatory changes being frequent and significant, especially when we look at some of the regulatory regimes around IFRS 9, or in fact, even regulatory reporting, which asks for detailed granular data, clearly asks for a more alignment of finance and risk functions. Now, when we look at some of the drivers like external conditions, especially the current COVID pandemic we are into, and the business downturn in service industries and their exposures to bank has put a lot of pressure on financial institutions to relook at their expected credit losses and estimate provisions and also associate capital, which ask for a more optimized unification of finance and risk. Of course, there are a number of internal drivers in terms of reducing data redundancies and silos, asking for a more streamlined data environment, which with standardized data and more agility, enabling the business with a platform to innovate, to come up with new products and services. Now, clearly, all of these drivers ask for a finance and risk alignment. Now, of course, this starts with defining a target operating model, aligning with policies, processes, and systems. Now, what we believe is the alignment really needs to start with data. Now, the data alignment will drive value, which means it could be across data granularity, the quality, speed, or in fact, even control and efficiency. So there is clearly a need for a data-driven transformation. Now, when you look at some of the leading industry analysts' views, clearly this message is also echoed with a need for a data-driven analytical transformation. Now, here's one such example. Now, one of the key studies talks about alignment of finance, risk, treasury, and performance management strategies under the same data platform is key. Now, increasing reliance of usage of models for business decisions has put a premium in terms of quality of data and also the timeliness of data. Now, whether it's identifying growth areas or identifying new products, market expansion, and defining these growth areas and executing the growth strategies on a same shared truth across risk, finance, and treasury becomes more and more important. Now, having set this context on a number of drivers, now let's look at what is the size of the price. Now, what is the full potential and the value of unifying finance and risk? Now, here's a very interesting study done by Deloitte with one of the customers, which talks about the total value delivered by unifying finance and risk for an organization is close to about 3 to 4%, 4.5% of ROE. And now this is quite significant for a financial institution. Now, this interesting study breaks this down by a number of value drivers, meaning opportunities to improve operating income by more alignment of finance and risk data. Now, what this means is banks can now uh, more optimally look at customer targeting. Further, banks can move away from a static scorecard-based approach for pricing to more, risk-aware, relationship-based pricing to improve the top line. Further opportunities to better match assets and liabilities. Now, all of this translates to close to a 1 to 1.5% in ROE. Of course, there are other value drivers in terms of reduction of operating expense, where a true finance and risk platform moving away from silos will provide improved process efficiencies, reduce system costs, and also improve data quality, which accounts to close to 0.5 to 1% ROE. Now, the other key value driver is around capital. Now, an optimized solution with clear risk and finance unified data will enable the bank to improve the estimation of provisions and also free up, based on that, free up a lot of capital which is set aside. Now, of course, there are a number of other value drivers in terms of intangibles, in terms of expectations which are delivered, meaning now the business has more access to data in terms of its speed, flexibility, agility, and also the business having more confidence with respect to reporting data to external stakeholders, and also even regulatory audits and oversight. Now, having understood the overall value of unifying finance and risk for organization, even if we look at a conservative 1% improvement on ROE on such a program, that would be significant improvement for the business. Now, with this in context, let's look at some specific customer examples. Now, let's walk through some of the typical challenges we've seen with our customers in their journey of integrating risk and finance. Now, I'm sure a number of these challenges will resonate with you. Now, one of the key challenges is starting with community. So we see that significant amount of time spent by your resources on lower order of activities. Now, what this means is, here's an example for a finance team, which has about 93 different analytics teams comprising of 1,200 people. And when we dig deep and review, we see that 50% of their time is spent on lower order of activities, such as preparing data, standardizing data, and so on and so forth. And this really translates to about 600 people on an average about 125 million in costs annually. Of course, there are other specific challenges in terms of tools, which you acknowledge, in terms of disparate technologies, disparate tools across risk and finance function. And of course, a proliferation of manual processes in terms of spreadsheets and so on and so forth. Of course, there are specific challenges where the business now starts to create their own version of truth in terms of proliferation of end user computing and also the underlying data marts. And the specific challenges around data quality and primarily challenges around access to required data and the underlying processes. I'm sure we've seen, you would acknowledge a number of these challenges within the organization. Well, let's look at what is that Oracle brings to the table from a solution standpoint. Now, what you see here is the Oracle's reference architecture in bringing in finance and risk information together. Now, this is a data-driven architecture in aligning finance, risk, treasury, performance, and regulatory programs for the organization. Now, one of the key parts of this reference architecture is the underlying data layer. Now, this is a curated data model, which enables the data-driven integration across all of these functions. Now, let me walk you through this picture. Now, we start with the left-hand side. We work with existing investments of our customers within their data lakes and enterprise data warehouses with our curated model in terms of accelerating your data lake and warehouse efforts in integrating finance and risk data. We also work with a number of other source systems and ability to work with your data lakes, warehouses, and source systems, and able to bring all of this information into a pre-built curated data model for integrating finance and risk. Now, this data model is structured in a very granular fashion, which means it can hold account level information, transaction level information, or positions and balance information. Now, if you look at a use case for finance, this data, this data structures is pre-integrated with ERP. Now, what this means is an ability to bring transactions from source systems, conduct quality assessment, standardization, and also aggregate them and, and provision this information to downstream accounting. Now, here we see Accounting Hub, which is a single centralized accounting rules engine where the accounting rules are applied once across all the sourced information, which creates the required debits and credits. And further, this information is provisioned to the downstream general ledger where the balances are posted. Now, once the trial balance is complete, depending on the number of subsidiaries, all the trial balances are further provisioned for downstream enterprise performance suite of products for financial close and their disclosure reporting. Now, the key part of this reference architecture is once the trial balance is complete, is to bring back these balances back to the data layer. Now, there is another set of detailed customer book of records, which is the operational systems, an ability to bring back the balances from operational system and reconcile this with the source of truth, which is the financial balances, and an ability to reconcile and enable this data layer as a single source of truth within the organization. Now, this becomes a single point of reconciled design within the data ecosystem. And now this data can now be provisioned for a number of use cases, be it across risk, performance, treasury, compliance, and all of this information now is available in an integrated results area, supporting use cases out of the same unified results set for statutory reporting, meaning all the notes to account, detailed notes to account for statutory reporting, and also regulatory reporting and management reporting. So what are the key takeaways here? Now, clearly, this is a strategic architecture in terms of integrating finance and risk functions. In addition to that, we can work with specific banks' priorities. The priorities could be across finance, it could start with risk, and aligning with the bank's priorities and enabling quick wins is part of this strategic architecture. Now, how do we get there? So, like I mentioned, there's clearly a no big bang approach. It's primarily to look at working with your priorities and the specific use cases. Now, here's a representation of a number of use cases enabled within this platform. Now, of course, there are use cases. We start looking at risk. Of course, there are a number of use cases across the banking book and trading book, across different risk areas like credit, market liquidity risk, IFRS 9, stress testing, and so on. Now, if we look at the finance specific use cases, we enable the finance function to move towards a more thin chart of accounts, a thin GL in terms of faster financial close, and yet maintain all the details with the thick GL for detailed management and reporting. Further, there are a number of other use cases, an ability to build detailed balances, and further additional value-added activities like revaluation, FX gain or loss calculation, but also enable use cases such as notes to accounts for statutory reporting, or even accurate granular cash flow based budgeting and forecasting, helping the FP&A within your finance function. Of course, there are other use cases across treasury like asset liability management, fund transfer pricing, or even risk adjusted performance management. Of course, the platform also supports customer analytics in terms of use cases such as customer 360 across your retail or even institutional portfolio. Of course, the same platform with a single view of customer with the same data can also support a number of regulatory reporting use cases. And of course, we comply with a number of jurisdictions across the globe, within Europe to US, to a number of jurisdictions in Asia as well. And there are other use cases across anti-financial crime. And if your organization also has an insurance portfolio, we do work with use cases such as IFRS 17 to insurance-specific performance analytics, and also look at aligning the actuarial and finance function with integration. Now, having started with your priorities and the use cases, what is the actual value across the solution? Now, The solution is designed to deliver value across the entire information value chain. Now, what this means is it provides a first order benefit in terms of shared data. Now, depending on the use case chosen, there is an ability to bring data once and reuse as your requirements evolve. The second order benefit in terms of shared processes. So what this means is common set of rules to common set of cash flows. Now, what we've seen is a bank with typically a medium term to a large bank, a cash flow process or cash flow system itself is a multi-million-dollar project. Now, looking at these cash flows being siloed, meaning an independent cash flow system for risk and a separate system for finance, a separate for treasury, is completely suboptimal. Now, the solution enables a shared set of processes. In addition to that, the third order benefit is shared set of results, which means the KPIs, whether it's submitted to external regulators, like external stakeholders, like regulatory reporting, or even internal management reporting, like risk-adjusted performance. Now, the key idea here is to decouple data from applications and silos and start looking at data and using data as a strategic asset within the organization. Now, let me give you some example. Now, here's a representation of the solution with an integrated finance and risk view. Now, there are, of course, a bank with a number of use cases is what you see here. Use cases for treasury, such as fund transfer pricing, use cases like interest rate risk, like asset liability management, liquidity risk management, or also use cases such as regulatory reporting, pricing, or even internal management reporting use cases such as risk adjusted performance management. Now, one of the first order benefit is an ability to bring data from your existing warehouses, data lakes to a number of source systems into a curated data model. Now, the ability to bring data once and reserve this data for a number of use cases is the first order of benefit. The second order of benefit is a common set of processes. Now, what this means is the same set of cash flows is now serving the treasury function for the FTP. It is also serving the same cash flow engine and process, serving the interest rate risk function to even liquidity risk for the regulatory reporting use case, or also even the IFRS 9 function for calculating their expected credit losses. It's completely optimized, a same cash flow engine and data serving a number of functions across risk, finance, and treasury. And not just that, a common set of business rules or even risk modeling processes with complete governance shared across risk, finance, and treasury. The third order benefit is in terms of shared KPIs. Now, if you look at an example of some of the KPI outputs from a capital engine, can now be used for downstream regulatory reporting, and the same capital engine outputs and data used for an internal use case, such as improving the top line for risk-adjusted pricing, or even internal management reporting, such as risk-adjusted performance measurement. Now, clearly, this kind of a data-driven design provides a complete different order of benefits across the information value chain. Now, here's an example of the first order of benefit in terms of its quantification. Now, let's look at, let's say a bank is interested and their first use case is in treasury called for fund transfer pricing. So that means we're able to source all the data from the source systems, data warehouses, and once the data is sorted, which is 100%, and once this use case goes live. Now, once this use case goes live, now as the customer's requirements evolve, and the requirement could be across, for performance, for profitability, or it could also be for your FP&A for finance, for your balance sheet planning and forecasting, or it could also be a use case around interest rate risk management, or even an IFRS 9 use case. So there is an ability to bring data once and reuse. So what this means is once the customer goes live with fund transfer pricing, the next use case, there's close to about 93.4% of data commonality. So what this means is there's only a delta 6.5% of data which is required for this use case. And this also means there's only a 6% data, incremental data, which is required for a use case like planning, for balance sheet planning. Now, this demonstrates an ability to bring data once and reuse, and and provide significant benefits to our customers in terms of a data-driven approach. Now, I did start this webinar talking about transformation programs carrying negative connotations, and typically these programs taking a lot more time in terms of delivering business value. Now, what we believe is based on a data-driven approach and providing value across the entire value chain, be it across data, underlying processes, and shared KPIs, we're able to bring quick wins in terms of a data-driven approach for unified finance and risk, compared to an in-house approach leveraging their existing data warehouses or data lakes to unify finance and risk. In summary, we helped a number of financial institutions in the journey of unifying finance and risk, adopting a data-driven approach, which means rationalizing fragmented set of sources with a single source of truth with a solution, and also bringing in more confidence with the proven solutions with mitigated risk. And since the solution is designed ground up, it enables best practice principles in terms of risk data aggregation and reporting, complying with BCBS 239, and clearly a no big bang approach to analytical transformation, meaning working with banks' priorities across risk, finance, performance, and treasury to enable a strategic solution for our customers. Further, leveraging data as a strategic asset within the organization and being future-proof. Of course, Oracle Financial Services analytical applications today is live in 24 of the 28 global cities. Further, we have experience of 500 plus customers of different scale and size across a number of jurisdictions across the globe. We can help you with your journey of unifying finance and risk. I hope you enjoyed the session. If there are any questions, any comments, and if you need more information, please feel free to reach out to me, and that is my email ID there. Thank you very much for your time.